Math is everywhere. It's in the way galaxies swirl, the way earthquakes strike, the way cities grow. And yes, it's in Bitcoin too. But to really see it, to truly understand Bitcoin, you have to step into a different kind of framework. Not the typical charts and headlines, but the deep structure of reality, the power law. Let's dive into something that fundamentally shifts the way you understand Bitcoin, not as a speculative asset, not as a tech product, but as a natural phenomenon, one that obeys the universal laws of scaling and growth. Because once you see Bitcoin as a power law, you realize this isn't just a financial innovation, it's a mathematical inevitability. Here we're plotting the log of Bitcoin's price against the log of time, and what you see is a straight line. That's the signature of a power law. The slope? Around 5.7. Now, as a scientist, this makes you ask, where does this number come from? It's not arbitrary. There's some deep underlying mechanism producing this regularity. Just like the laws that shape rivers, populations, or star systems. Now, this is where things get even more interesting. Let's look at the number of Bitcoin addresses, essentially a proxy for network activity or adoption. We plot the log of addresses against log of time, and again, another straight line. This one's even cleaner than the price. The slope? About 3.1. Why does this matter? Because addresses are one of the closest things we have to tracking Bitcoin's true adoption. Not a perfect metric, and that's a good thing, but a real one. You don't need to give your name or your physical address to create a Bitcoin address. You just interact. You participate. You build the network. And what this clean power law tells us is stunning. Bitcoin scales over time in a self-similar way. It doesn't matter if you zoom in on weeks, months, or years, the pattern is the same. It's scale invariant. That's a property we see in natural systems, not engineered ones. You've probably heard it said that Bitcoin follows an S-curve of adoption. Maybe you've even seen one of those polished institutional presentations by people at the top of major firms who confidently state that Bitcoin is early in its S-curve, that we're still just in the early adopters phase. Let me say it clearly. That is wrong. This is not an S-curve. This is a power law. And that difference changes everything. The S-curve model comes from the way traditional technologies are adopted. Think the refrigerator, the automobile, the telephone. First, you have the crazy innovators, then the early adopters, then the majority, then the laggards. The total adoption follows an S shape because eventually it saturates. There's a peak, and then it levels off. That's what an S-curve is. It has a natural ceiling. But Bitcoin is not doing that. A power law is a type of mathematical relationship. You've probably seen it, even if you didn't know the name. It shows up when one quantity grows as a power of another. On a normal graph, power laws look curved. But when you put both axes on a logarithmic scale, that's log, the relationship becomes a straight line. That's the magic. Power laws are everywhere. The size of cities, the frequency of earthquakes, wealth distribution, internet traffic, neural connections, even word frequency in language. They describe systems where a few things are big and many things are small, but the pattern holds across every scale. That's called scale invariance. It doesn't matter whether you zoom in or zoom out, the pattern stays the same. And Bitcoin follows a power law. Let's talk about price. If you take the history of Bitcoin's price and plot it normally, just price versus time, it looks chaotic. Bubbles, crashes, plateaus, like a roller coaster. But if you plot the log of price against the log of time, something beautiful happens. It becomes a straight line. That's the power law appearing. Now, this line isn't perfect. There's noise, Bubbles go above it, crashes dip below, but the trend line is clear and consistent. It's the underlying structure of Bitcoin's price. The slope of this line, about 5.7, isn't random. It reflects the underlying growth dynamics of the network: capital flow, scarcity, and belief systems converging. And as a scientist, you ask, why this number? What generates this slope? That's where things get really interesting. Because price isn't the only thing showing this behavior. Let's shift focus to something more fundamental than price: addresses. In Bitcoin, every transaction involves addresses, unique identifiers used to send and receive, BCI. They're not tied to a name or identity, and that's good, but they're still useful. Because addresses are one of the best proxies we have for adoption. Let's shift focus to something more fundamental than price: addresses. In Bitcoin, every transaction involves addresses, unique identifiers used to send and receive BTC. They're not tied to a name or identity, and that's good. But they're still useful, because addresses are one of the best proxies we have for adoption. So what happens if we graph the number of addresses over time using a log-log scale? Another straight line. Catastrophic in line than the price. Fewer fluctuations, less noise. A near-perfect power law. So what does that mean? It means that Bitcoin adoption, as measured through addresses, is not slowing down, not leveling off, not nearing some saturation point. Instead, it's growing consistently in a power law fashion, like a living organism, like a city, like a tree branching out. This growth is scale-free. It looks the same whether you're observing a few months or over the span of a decade. Bitcoin follows an S-curve of adoption. This is based on a model from traditional technology adoption. The S-curve says adoption starts slow with innovators, accelerates with early adopters, peaks with the majority, and finally levels off with laggards. It's the curve used to describe refrigerators, cars, phones, even the internet. Sounds logical, right? But here's the problem. Bitcoin doesn't follow an S-curve because S-curves saturate. They top out. They imply there's a point where the network stops growing, where everyone who will adopt already has. But that's not what we see. We see a power law, a line that keeps going. No top, no saturation. Why? Because Bitcoin isn't a product you adopt once, like a refrigerator. It's a network, a monetary language, a living economy. And economies don't saturate, they scale. So, when institutions say we're still early or mass adoption is coming, they're thinking in S-curves. But when you look at the data, when you plot the math, the power law shows we're not early. We're not waiting for some magical S-curve peak. We're already inside the system, and it's scaling right in front of us. In power law systems, the rules don't change as the size changes. The same patterns apply at every scale. This is true in fractals, nature, evolution, the internet, human behavior, and Bitcoin. So when we say Bitcoin is scale invariant, we're saying the behavior of users in 2011 isn't fundamentally different from users in 2025. The network grew in the same structural way with 10,000 addresses as it does with 100 million. The math remains stable. The laws hold. This is radically different from most technologies, which hit a peak and then taper off. Bitcoin doesn't taper. it unfolds. That's why timing in Bitcoin is such a misleading idea. People love to say, "You're early." But in a scale invariant system, early and late are illusions. So what does this mean for you? If Bitcoin follows a power law, you shouldn't expect a final wave of adoption. There isn't one. You shouldn't time the market based on hype cycles. The underlying curve is what matters. You shouldn't base your strategy on comparisons to old tech curves like iPhones or VHS tapes. Instead, you should focus on network effects. You should look at address growth as a more stable indicator than price. You should understand that Bitcoin doesn't behave like a startup or a stock. It behaves like a physical phenomenon, unfolding over decades, maybe centuries. This completely changes your investment framework, your policy framework, and even your personal understanding of where we are in the arc of Bitcoin history.
There's a lot of noise in the Bitcoin world. You hear, "This too volatile. It's a speculative bubble. It's peaked. We're still early." All of these statements come from people who are not looking at the right graph. If you look at linear price charts, you'll be constantly confused. If you zoom in on weekly candles, you'll live in fear and euphoria. But when you look at the log power law, everything calms down. You see the real structure. You realize the dips are expected. The peaks are expected. Even the crashes are part of the same breathing pattern. The line keeps forming, the pattern keeps holding, and so the noise fades. Most people think Bitcoin is a new technology. Some think it's a financial asset. A few think it's a revolution. But what if, just what if, Bitcoin is something even bigger? What if it's a natural law expressing itself in digital form? What if it's not just invented, but discovered? Because when you look at Bitcoin through the lens of a power law, when you plot the math, see the scale invariance, and let go of the hype and fear, you start to understand something truly profound. Bitcoin isn't just part of our economy, it's part of our reality. If this changed your perspective, share it. Not just because it's Bitcoin, but because it's math.